Andrew, I'm so pleased to have you join me again for another exciting weekly episode of my Land Cycle Investor interviews. How are you going this morning?
Good, thank you. Great to be back. Thank you for inviting me back on. All is good.
All is good, except it's not quite good, is it? Because the world's falling
No,
apart.
no.
We've got
That all is
rise.
terrible. Let's start again. No, all is terrible, Catherine.
Let's
That's
just
it.
get. I know. Rising oil prices, rising food
Yeah.
prices, war going on in the Middle East and Europe, and with multiple people saying that it's very likely to escalate. I interviewed David Murrin last week, who frightened my subscribers once again. I always come away from those interviews never knowing whether I'm going to put my head under a pillow or build a bunker. So we'll see how we go today with putting a slightly lighter cheerier spin on things as we talk all things cycles to help the listeners forecast what might be coming up ahead. And where should we start this week? Do you have any preference? Because I know we discussed a couple of things that we were going to talk about. We could jump into war cycles, or we could go straight and have a look at grain prices, which we haven't done yet.
Whatever you want. They're all related. So let's start with war cycle, shall we? Whatever you want to discuss there.
Yeah, I mean,
Yeah.
I think I mean I've written a fair bit about war cycles. I always feel that the most accurate charting that we have for war cycles is the Kondratiev cycle, because in the period of time that it has been charted, war comes at the peak of that cycle. So the last one was the Vietnam War, and the one before that was World War One, and you've got the Napoleonic Wars that also came at the peak of that cycle. I mean, the other things that I look at when I'm doing my cycle work as well is that, whenever you have the cycles seem to give you the times of good and the times of bad. And whenever you have the times of bad are the times where you're going to get the pandemics, or the times you're going to get some major flooding event, or the times that you are going to get war. So these are generally bad times for the economy. So whether they're coming at the end of the 18-year cycle, whether we're looking at more significant cycles such as a 90-year cycle or a 60-year cycle, or as Kondratiev showed, at the peak of the resource cycle, the battle for resources, because that's what war is always all about. It's always about the land.
Yeah.
It's going to feature at one of those significant points. And I guess the beauty of your analysis is that you go into the history. You're a historian. You look at the intricate details of the inflection points, and you see where these cycles are colliding to really give a very, very accurate forecast ahead. And I should say to anybody that's watching, you are one of the most accurate forecasters that I have ever worked with, ever interviewed, and you do produce some absolutely stunning work, amazingly precise. And let's give a plug to your Instagram channel as well, and then I'll stop talking and let you get a word in. But you have a brilliant Instagram channel where people can go on and hear some of the live updates that you do each day as well, to keep them abreast of it. But what is, we're seeing war in Europe, we're seeing war in the Middle East. What has been pointing towards this type of eruption right now occurring?
Goodness, right. So, from a cycles viewpoint, first of all, I've been forewarning about this um, decade being a major window for war, and there are several reasons for that. Oh gosh, how do we build this up? Where do we start on this one? I think realistically, if we the key war cycle that I'm interested in is the 82 to 84 year cycle. So if we were to go back to, say, the outbreak of the Second World War in 1939, and then add your 82 to 84 year cycle, that takes us 2021, 22, all the way to 2024. That's where we saw the Ukraine conflict break out. But then, if you look at, and actually you can then take that cycle back, uh, um, and the previous revolution really effectively takes us to the Crimean War and so on. But let me just focus on this Second World War. That started in 1939. The Americans came in on the 7th of December 1941 after Pearl Harbor. So we're now effectively at the 82 to 84 year cycle from America coming in on that. Where we are right now, taking these repetitions back, obviously the first one takes us back to Pearl Harbor, for America, the previous revolution takes us to the American Civil War, and the revolution before that takes us to the War of Independence, and leading to the Declaration, and thereafter Yorktown in 1781 was effectively did see the end of the Brits in America. So these are the key war cycles that have been in play. But the reason Iran was so much in focus was that again, this was covered in the year ahead report as well as the February report. We knew this was coming. That there's two sets, well, more than two sets of cycles were coming together. The 45-year cycle took us back to, if you go back to January 1981, 45 years ago. That is when that is when the Iranian embassy siege, the American embassy siege in Tehran ended, and that had been going on for 444 days. So now I'm kind of throwing stuff in randomly. I realize people are probably thinking, what on earth is he talking about? Let's put this into context. The Ayatollah, the theocracy, all really started in 1979, 1st of April 1979. And during that, the following 12 months, the American embassy in Tehran was occupied, and people were taken hostage. So those American hostages were actually freed 45 years ago, January. That Jimmy Carter, the president, had tried to negotiate their release, and then he sent in a military operation which failed very badly, Operation Eagle Claw. The Iranians hated Carter, but when Reagan was inaugurated in January 1981, the hostages were freed. So the point is, the 45-year cycle saw a slight easing of relations between America and Iran. But the story doesn't stop there, because if you go back to January 45 years before that, which would be 1936, the father of the Shah of Iran, or the grandfather of the chap now who is trying, who'd been agitating for to bring down the theocracy, he actually passed legislation to make Iran more Western, to remove, the mandatory wearing of the hijab, the veil, in fact, to actually not permit that. So you can see the 45 and 90-year cycles are both kind of coming in very, very clearly, both suggesting that Iran, there would be some degree of change in the leadership in Iran, and possibly opening up to the West. Now, this time, I'm not sure if we're going to open up to the West, in what's happened in the last 15, 16, 17 days. But so the point was, there's a 36-year cycle as well there. With the Ayatollah, who was 36 years ago, I think off the top of my head, was when Ayatollah Khomeini died and was replaced by another leader. But that's in play. There's a 45-year cycle in play, a 90-year cycle. So all the focus was on Iran, effectively, for the month of January. And, we're only 4 weeks out in these cycles. And that was because the smaller cycles aligned us very clearly. I think you probably saw the notification we put out on the 26th saying, watch out, they're going to attack tomorrow. And that part of that, again, in the year ahead report, I talked about cycles for Trump, suggesting volatility in his behavior. And we had the 1st of March. So that was just one day after the attack there. So that's how we put these war cycles together. We have to look at them within the context of any particular country or any particular sets of countries, any pairs. So that's an overview, and people have probably lost the will to live already with all that. But just answering your question, Catherine.
Yeah, it does. I didn't read that. You send me the monthly reports, obviously, but I actually didn't read that. It was because I sent you a message, because I thought that, oh look, it'll be on Purim, which was the 1st of March, and you said 27th of February. You were close. Well, 28th came in between those two dates, but I mean, look, I did it based on, I'm Jewish, and there's a real close correlation between, I say close correlation, but it's a very uncanny correlation between the story of Purim, which was the Persian, ancient Iran's attempt to wipe out the Jews and the battle that took place at that time. Well, the story of Queen Esther, who negotiated peace and overcame the enemy at that time, and this war happening, and but your dates are absolutely uncanny when you come in with those precise time periods, which you're giving us a clue as to how it's done, by talking about these longer term cycles. But that also correlated with you look at geosolar storms, and was that one of the things? Because that was one of the alerts that you put out as well, saying that we'd had a solar weather event.
Right. Well, I mean, we've constantly got solar weather. It's just that it was an extreme. Well, the alert I put out, which actually related to build up amongst other issues, and that's where we really saw the peak in some. I mean, people will contest this, but we've done enough research to know that it works. But where you get solar flares being ejected from the sun and pointing this direction, we do see changes in behavior. And I think it's all to do with the ionization of the atmosphere and how that affects optimism and pessimism. And this is what Edgar Lawrence Smith wrote about in Tides and the Affairs of Men in 1939. He believed that. There isn't very much research on it. We've looked at it on an algorithmic basis, and we have got some sort of this definitely work in progress, but we are able to identify some of the clearer storm windows. And talking of that, I'm just reaching out for a piece of paper that I keep on my desk to see when the next one is. There is. I think the next one we're looking at is around about the 24th of the month. So just that's a potential forecast. Now, the importance of this solar weather is that it can damage satellites. If we get a coronal mass ejection or whatever, this gush of energy can damage satellites. When it gets, it can create surges in the grid systems as well. It can affect navigation and so on, obviously because of the GPSs and the satellites. There was an event, the Carrington event. Now, hang on a minute. It's a problem with doing morning interviews. My brain isn't switched on. Is it 1869 or 1859? I'm pretty sure it was 1869. The Carrington event basically was this massive solar storm that was all, the sky. This is where you see the aurora borealis, the northern lights, and it impacted America for a couple of days, and a lot of the very basic telegraph system was knocked out. There were a lot of light bulbs were just exploding and things like that as these surges came through. Now, we're far more sophisticated now with all our technology. So these do create threats to all sorts of things, all sorts of electric systems. So the reason we study these is if we see an extreme storm, and NASA really, all they're doing is they're observing the sun, and when they see something come out, they basically give us 20. Oh, excuse me, sorry. Sorry about that. When they see them coming, we've got 24 to 36 hours notice of when they're likely to impact the Earth or get into the atmosphere, as it were. So what we've found is that they impact human behavior. They are directly correlated with extremes in markets, okay? And also they are often aligned with, extreme human events, because optimism and pessimism kind of gets out of hand a little bit. So yes, there was a storm that that came through. It was of a very high magnitude, relatively speaking. The K index was high, and therefore, at that time we saw the news was flooded with all this scandal. I think it was all the Epstein stuff, Prince Andrew, all the crazy happenings in the White House, all concentrated within 2-3 days there.
So, yeah, the Carrington event, 1859. That was
1859.
Quite an extraordinary. Yeah, I mean, an extraordinary example, really. I mean, you would look at that for a cycle, really, wouldn't you? You would sort of watch that for something like that, similar, some kind of similar
Yeah.
disruption happening again. But I mean, I think whenever we talk about this, because a little bit like you, I go into the astrology and sort of touch on that from time to time, and then whenever I do, it's always in the back of my head. I'm thinking, people are listening to this and thinking, well, isn't that a bit crazy? But when you think about how an event like that can impact the earth and how it can impact the systems that we have, it would be rather stupid not to think that it can impact us emotionally. I mean, there's been a great deal of research done into the moon, which is a great forecasting tool as well, which a lot of the great forecasters would forecast by the moon or forecast by solar eclipses, where people have found a direct correlation between moods and what happens on a full moon, and the emergency services reporting that people get a bit crazy
Yeah.
around that time. So yeah, so I mean, it certainly does impact things, and I think that's I mean, you've been so accurate. You were very accurate in putting out a forecast on Instagram about Andrew and what might happen. I think it was on Instagram that didn't you put out something about that as to what's.
Yeah, it was. I mean, Instagram's a bit for fun. I've never been a fan of Instagram. This is, we've had these private conversations, but my team here say we need to get on it, and I'm used to sitting here and talking a little bit more sensibly, and albeit, as a bit of a madman. But anyway, it's been a little bit of fun, so we are doing that, and we're just attracting a different audience there. The other thing, by the way, I wanted to add to this, and this is highly contested, but I've noticed a correlation between geoseismic activity, i.e., earthquakes, and some of the space weather. Now, this was quite interesting, and this come to mind is because when I popped that on Instagram, it was met with a barrage of abuse, saying there's no correlation, what a load of rubbish. So I don't know what it is, but there is definitely a correlation. And what we did see in that particular window that was highlighted on that post was that America had a whole series of, I think it was Southern California area, had a whole series of minor earthquakes within 12 to 16 hours. They're all minor tremors. And of course, it's easy to say, well, yeah, but there's always tremors in Southern California. And that's true. There are always tremors there. But the point really is that aligned with a greater, there is some degree of correlation. So, I mean, I don't, the pure scientists would say it's all a load of nonsense. In fact, many of you watching this might think it's all a load of nonsense, but it does work. So I'm not afraid to stick my neck out on that because it works.
My subscribers.
By the way, when we saw this,
yeah,
that's where we saw these blow-off moves in gold and silver and things like that as well.
Yeah, look, we have to be realistic about this. I mean, a lot of the work that we do is building on some of the ancient forecasters. Say ancient, I mean, they're not so ancient, but, sort of going back to the early 1900s and 1800s, that, people like Samuel Benner and W.D. Gann, who did write about their forecasting methods in part. They gave, some of the information away. And we build on that research, and that research was based on astrological activity. I mean, Samuel Benner was very clear in his book, Future Prices. Can't remember the exact title of it now because just like you, this is late at night for me. So
Benner's prophecies, yeah.
But Edward Dewey referred to it as the most accurate when he did the study of it. He was like, this is the most accurate record of forecasting that I've ever seen. I'm paraphrasing because I can't remember the exact quote that he used, but I'll put it in the report when I write the report for this. But and in that book, he's quite clear about it. He says, this has got to do with solar activity, and he makes some suggestion as to how he does it from observing prices and observing the patterns in prices and observing the history. But he also recognizes that there is a correlation here when he's forecasting forward with solar eclipses, for example. And he puts that in his book, and he says at some point science is going to catch up with this and they're going to provide an explanation. And unfortunately, what we seem to have done with science is almost kind of push that completely to one side, say that you can't forecast the future, you can't forecast future events or future expectations and prices. And we're completely divorced from the natural world that's going on above us and around us. But all of these things are patterns. So, I mean, you look at the history and like you say, you look at these events as well. But let's get on to,
before we move on, that in Gann's private collection, he meticulously plotted sunspots. And that was a really, when we found that chart, that was it was all delicately wrapped up. It was absolutely phenomenal. That was there. So he was looking at sunspots there for sure. And, that's worth thinking about. And that's effectively 11 to 12 year cycle there in activity. So I just wanted to mention that we know. I mean, he did mention it in one of his courses, I think. But actually, there are some meticulous plots on sunspot activity that he has there.
Yeah, I did a seminar back in 2015. I say a seminar. I went to a weekend workshop with David Burton and Ken Ring. And Ken Ring I've interviewed him. My subscribers, you'll find the interview under if you hover over the memberships tab on the website, you'll get to members podcasts and things, and you'll see an interview with Ken Ring. He doesn't do so many anymore because he had a stroke some years ago. But Ken Ring, he looks at sunspot cycles, and he's an incredibly accurate forecaster. In fact, he wrote a brilliant book about the moon and how to forecast the weather using the moon and using some of the planets. So he makes extraordinarily accurate forecasts. And I almost felt when I read that book that if you read that book, you'd know more about cycles than you would reading many other books, because it really does, paint it out very clearly about how things like the sunspot cycle and the seasons of the moon work. But there's this 45-year cycle, obviously half the 90-year cycle, also indicates that we're moving into that window of World War II, and that doesn't paint a very sunny picture for how this war might escalate. There's many forecasters out there that are talking about this heading towards a world war, us already being in a world war. So I'm interested in your opinion on what you see ahead, because that's where everybody's focus is at the moment, primarily because of how it's impacting inflation and oil prices, which was, well, something that thankfully I had in my forecast was that always for rising commodity prices and perhaps it mimicking something like the 1970s cycle. I think because we saw in Australia interest rates come down, and I said, look, this cannot continue. There has to be a turnaround. There has to be a tightening of credit, because that always happens as we approach the peak of the cycle. So how, we're going to expect to see rising commodity prices. How can that happen? The only way I could think of would be war, which would, correlate with the Kondratiev cycle. But, these are things that you're looking at exactly the same as well. So where are you seeing things head from now with the Middle East war?
Well, the war cycles, as I say, really sort of came in. The first part you asked really was about, where are we in terms of a world war? The first part of this really goes back to 2022, which was slap bang in the middle, or the beginning of the window for war cycles. So that's where we saw the Ukraine intervention, and so the Ukraine war, an intervention, and up to 55, I think it's 52 or 55 countries got involved with that. So this was quite big, this was huge. So that was the first part of it. In the bigger scheme of things, as I've said previously, time and time again, 2029 is 100 years on from the 29 crash and 90 years on from the outbreak of the Second World War. So I suspect this latest activity is here to stay. In terms of commodity prices, we forecast, create the grain reports. They're quite specialized. They, provide the year's forecast and turning points over the course of the year. We update them every month. And for anybody that's been watching grains, this was, the huge move that we saw that began just a few weeks ago before the outbreak of this war is very impulsive. So we are going to, the chart pattern has already discounted all this stuff. It's already there, and it's something that's absolutely critical. So that we are going to see a prolonged market, a bull market in the grains, but also things like cotton, are starting to move, as to our just so many other commodities. So this is a bigger commodity cycle that we're seeing. And, I would have to say, I'm not sure if it's going to carry on through into 2029, but certainly I do see this going into next year. If you talk about the K wave, the Kondratiev wave, if we go back to 1970, 71, we saw the Russian famine, we saw the currency crisis, and we also saw there was another factor, I can't remember what it is off the top of my head, but that saw grain prices go ballistic, and we're in a 55-year cycle from that, which 55, 54, 56, whichever, whatever you want to call it, the K wave coming in there. And I would just say a straight Fibonacci number of 55 years from that point, really, in terms of cycles. So, and it's also 3 18.6-year cycles again. So it's all there. It does, now we've got the fundamental, in inverted commas, the fundamental thing. There's going to be a shortage of fertilizer. There's going to be a shortage of a lot of things as the way this carries on. And I think, one of the things to think about here in the war cycles and putting this all together is that we are in the 250-year cycle from 1776. This is supposed to be the big celebration. Trump was, going to have this huge parade and, have all the military file passed like all good Russian previous leaders have done and so on. And basically, it's not going to be pretty. So 250 years, the death and rebirth cycle is, what's happened to the Constitution? If we look at the legalities behind war, there are no legalities. The Constitution's been overridden. Congress hasn't had any say. One person is unilaterally making these decisions. So is this the end of the great American Constitution? This great document that was all about fairness and freedom and doing things in a good way. Is this the end of America as we know it? Or is America about to make a quantum leap and absolutely dominate the world? So those are the two ways it could go. Right now, I think things are reasonably obvious which way it's going. But what I will say is when you look at the micro cycles, as we approach the 4th of July this year, they do not look settled at all. I think that's the point that revenge will take place on homeland soils. And I think they'll be highly disruptive. And the other really curious thing is if we bring the 90-year cycle in, in 1936, the Olympics were in Berlin and they were showcasing the ideology of the time. Hitler was very prevalent there. He was pretty disgusted that Jesse Owens, an African-American, did so well. I kind of think it's interesting that within 90 years to within about 10 days, we have the World Cup in America. I don't know if it's even going to go ahead. FIFA have been strong supporters of Trump's administration historically, but I don't know if that's going to be used for grandstanding as well. So these are just curious cycles. But the 250-year cycle suggests that we're at a huge tipping point because it's also aligning with these 82 to 84-year war cycles and the 90-year cycle. So it's all change in global order. And as we talk about this war, right now, the strategy of this administration has been one of carrying out a very hefty fist fight, whereas the adversaries have been of this administration and Israel are using a fist fight, whereas the others are playing chess. So it's going to be interesting to see how this one plays out.
Yeah, it's a good way of putting it. I mean, if we go back to that 1970s cycle, and I was writing about this last week and actually also the week before in the report, because now we can sort of see how it's playing out, and it is, a similar to that K-wave peak that happened in the 1970s, the oil price spike and the crash in 1974. But oil prices continued to go up, through to 1979. It wasn't much longer after that we had the early 1980s recession that hit, and that was a very bad recession. It didn't crash the property market, but it stalled everything. So it wasn't the end of the 18-year cycle, but the end didn't come much longer after that, because then that was the early 1990s recession. But also, sort of going back to 1936, it was 1937 then that the markets had the panic and went into a recession. That was a mid-cycle recession, so it was after the sort of 1930s crash. And then that was sort of the next recession, the 1930s crash, crashing the property market, of course, which is why I call it a mid-cycle recession for my subscribers, so that they can get an idea of where we are. So, forward 100 years from that, you've got, that would be my forecast actually for the next, where we're going for the mid-cycle in 2037. But, it doesn't sort of bode so well for where we are right now, does it? Because you've got a 90-year cycle then that's resonating with 2027. which is a year ending in seven, which is a year that we would expect to see, more likely a significant financial panic happen. But you've done a lot of work on grain prices, and I don't know many. I think this is, you've got many tools in your toolbox when it comes to forecasting cycles. I think that's what's so fascinating about having conversations with you, because you look at so many different things. And you've done a lot of research on grain prices, and you produce grain reports, which
Yeah.
not I don't know anyone else that does that. I'm sure there are, but can you sort of go a little bit into that? I mean, is there a recognizable cycle in grain prices that you sort of fall back on, or are you using the same cycles that we're using for everything else?
There are some that I use that not really in the public domain, and I'm going to keep those in the box, as it were. But yeah, I mean, typically the commodity prices, 144-year cycles, a very big cycle in commodities, and what we can see here is if you take 1720 saw a commodity boom that also saw the South Sea bubble, as well as the Mississippi land crisis, and a lesser well, no, actually, there was a significant commodity bubble there. And if you take 144 years and add that to there, that takes you to 1864. Now, 1864 saw America was in the Civil War. On the 23rd of August, 1864, cotton trade at $1.89 a pound. Only 6-7 weeks earlier, it was at 3 cents a pound. So it went up 60-fold. And this was a case of supply and demand. Wheat also did the same. It went up tremendously. And the reason behind that cycle there was suddenly everybody that was tilling the fields and growing and harvesting the different crops was suddenly sent to the war. And they were there to join the war. What do you need if you're a soldier? You need a uniform. You need cotton for that. So the supply of cotton diminished and the demand for it went up. Well, 60-fold, as we know, and it was this huge spike. So that was a 144-year cycle there. Then you add another 144 years, and that takes us to 2008. So that was a no-brainer. That was a one that we traded really well. And what we saw in 2008 was that the dollar was very weak. So, certainly against the British pound, it hit $2.11, to the pound. I mean, it's 133 right now or something like that. So commodities have been historically traded in dollars. Now watch this space, because that could be about to change with what's going on in the present war cycle. But that shows you this, massive 144-year cycle. And then you can look at the half points of that, 72 years. And then, of course, the half of that is 36, and then the half of that is 18. We're back to the core 18-year cycle again. So this is how these things tend to play out. That's just one of them. In the history of commodity spikes, we talked about 2008. Then we got a secondary spike in 2010, 2011, and that was a direct result of the 1920 post-First War, the 90-year cycle from that boom there, which saw commodity prices in 1920 and 1921. So this is it. There is no individual cycle, but it's the ability to stack them. And we've always talked about the idea of, if you're in the cafe every Thursday and somebody joins us once a month, joins you once a month on a Thursday, then I fly down and join you in Melbourne once every 6 months on a Thursday. What's the Thursday that all three of us are going to be in that cafe, restaurant, or bar? And that's when the big cycle comes in, when all three congregate, as it were. So that's that. But in terms of modeling, there are certain years that do repeat in grains and in other markets. Gann wrote extensively about this. A lot of your people will have studied that. What else? So we put a forecast in there. We'll look at the key turning points, the pivot points, and we update that every month. And then most importantly, really, is the smart money, the commitment of traders data, which is something else we look at. So now we're kind of leaving forecasting and cycles and looking at what's really going on and what the smart money's doing. And we took a deep dive into that yesterday in our power session that we do every month. And it's pretty clear that wheat is looking like the strongest. The commercials. So the smart money, let me just give you background to that. Every week, people in America have to report their positions. So, and there's three categories, basically. There's the commercials. They're the farmers, effectively, the hedgers, the people that either create or use that commodity directly, so the food producers, that sort of thing. Then the non-commercials are the hedge funds. So they're trend followers. And what they tend to do is they wait for a trend to start and then they get on board. And if it's going up, buy and buy and buy. But the thing with the non-commercials, the hedge funds, is that they're wrong at extremes. They're usually heavily positioned in the wrong direction. And now we're seeing that if they were incorrectly positioned or positioned one way, they're all starting to get quite bullish in these things here. And the third group's the non-reportables. That's Joe Public. So they're wrong pretty much all the time, except for certain small commodities like, say, the meats and so on, and maybe cocoa and some of the softs. So when we look at this, we do see that we are situated, we're in a place where grains are likely to go up. There's likely to be a degree of food shortage in some parts of the world. And it's now we can see a shortage of fertilizer coming in due to the geopolitical situation. Then, if we get a variation in currencies and so on, that could also exacerbate the crisis as well.
I think what's so fascinating about this and fascinating about cycles is that you forecast this stuff and then you have to wait and see how it's going to happen because it plays out in the fundamentals, so the cyclical forecast is giving you that, okay, this is what is likely to happen in the future based on these past events, almost like there's an indent in time that where something has happened, and then that as that time circles around again, that indent is going to happen again. There's going to be a repeat there. But it's how is that repeat going to play out? I mean, with a food shortage such as we saw during COVID, well, okay, you can look at the pandemic. You go back to you were talking about 1920, 1921. Of course, that was the lost recession, or the forgotten depression, as they called it. But it followed what had happened during the Spanish flu, when there'd been a lot of workers lost, a lot of working age population lost, and the shutdowns and the supply problems that you would have had during that period as well. It was such an uncannily similar repeat, which enabled you to forecast the pandemic, of course, and you were one of the few that did. But seeing this play out now, I mean, that's what makes this work, I think, so exciting, because you put that forecast out there. It's a bit like, when I sort of put the forecast out that rates have to turn up, commodity prices have to turn up. And then we went through that period for a while, where commodity prices weren't doing anything. And everyone was thinking like, what's sort of happening to the forecast? And then suddenly it sort of all comes in. Unfortunately, it is war that's pulled this in. But I was watching an interview with a farmer. Actually, it was just this morning, I think, where he was talking about how they've only got so much fertilizer for so many weeks, and then they're going to be out of it, and how much more it's costing them now in diesel, and which means that prices are immediately going to go up. And so we're on this inflationary spiral, and interest rates have gone up, and that's only putting pressure on mortgages. And because it's putting pressure on mortgages, we're going to start to see an increase in foreclosures, squeeze on the job market, and it's almost inevitable that we're going to go into a recession. So here we are. What's your opinion on that, Mr. Pancholi? Recession, which is
sense,
what we've talked about.
Yeah. All I wrote was that 2026 was going to be no ordinary year. I wrote that at the beginning of January, and I think there's more to come. So first of all, what you're saying is absolutely feasible. I don't say correct, because we don't know if anybody's ever correct, because there's always the wild card, and there's always the black swan. The black swan is just a cycle that we haven't spotted really. But it does point to that, and there is no reason why what you're saying would not unfold. We have had relatively good times. We've had relatively good times for the last 20, 30 years, certainly in the West, So I do think we are seeing troubled waters. We're already in troubled waters really now. And I do think certain things don't bode particularly well. But, I leave this down to you, because I know you're very accurate with your work there. I don't know what to say other than I think there are more events likely to be forthcoming. I think I won't give the dates away, because I know a lot of people bought the Eurohead report, and so they're in there. But that's looming very rapidly is Taiwan. I think when one country, or not just one country, but one person unilaterally declares they're going to take all these different territories, then it's open house for everybody else. and some people are just playing a waiting game. So I do think that's going to change, and that's going to um, let's just say further irritate somebody who's got a short fuse, who thinks they're entitled to most of the world's resources, when another country starts making a move, and that's not very far away. That's why I think things are going to accelerate over the next few weeks and into July, really, where we see the 250-year anniversary of the Declaration of Independence in America. So,
Mm.
you know, things have unfortunately only just started. It's all doom and gloom, isn't it, really?
I thought it would be more cheery than the David Murray interview that I did.
Yeah.
Yeah, when
Oh,
I
really?
whether
Oh, so this is
it
the
is
cheery version, right?
it is slightly more cheery. I think I got to the end of that interview, I'd almost run out of questions other than where do I go and hide, when whether by the time we got to
Yeah,
the end of it. But you're it this a concept that China will move on Taiwan. I mean, I refer to David, he's a good friend of yours, of course, and
he is. Yes,
we sort of all have a good laugh between ourselves. But the David's been forecasting for quite a long time that China would make a move on Taiwan. I know America started to pull some of its military out of this area to assist with what's going on in the Middle East. So that kind of leaves this area a little bit undefended. The other person that my subscribers will be well aware of that has spoken about this, and I highlighted this in last week's report, is Fred Harrison, who has also talked about, and he talked about this. Well, he's talked about it for many years about China getting involved in a war at this point in the cycle. Fred is a historian, so although he doesn't look at all of the cycles as you do, whereas he sort of tries and finds that correlation, he is very focused on the land cycle. But of course, when you study history, you get to know the patterns of history, and so his knowledge has led him to this assumption that there would be a world war at the peak of this cycle, and also that China would, what if China makes a move on Taiwan? And I think that is where it becomes very frightening for us folk in Australia, because it starts to get a little bit too close to home. We're very lucky here because we're very isolated from what's going on in the rest of the world. You're far closer to it living in England. But yeah, I mean, if that happens, it doesn't bode so well for Australia, does it?
well, I mean, I think we've hinted or we've touched on this previously. That Australia is quite a jewel in the crown in the amount of in terms of all the natural resources you have there.
Yeah.
Relatively small population compared to the land size. So, clearly it's being eyed up. Whether or not you would see a land invasion would be a totally different kettle of fish, but if you study the art of war, the last thing you actually do is get into physical conflict. And China is exceptionally good at economic chess playing. That's its primary tool, its primary weapon. So I think it's going to be more economic. I wouldn't really see an invasion. I believe am I correct in saying that that's what David sees? Physical resources, China's physical presence in Australia. I don't know, but I think that they'd be more interested in really getting access to the rare earths, the precious metals, all the other minerals. And you can see how China has taken this policy as it has moved through Asia, because what's now happening is that Iran needs help, and it's pretty obvious that there is a degree of Chinese support. But part of this began when America pulled out of Afghanistan. When it pulled out of basically Afghanistan. And what we saw here was that this sudden withdrawal was it perpetuated the move of Chinese presence further towards the Straits of the Strait of Hormuz. So that's really what it's all about, really, is it's moved further and further over.
Let's talk a little bit about the trading course that you put together. And the reason I sort of want to touch on this is because as we get to this pivotal point in the cycle, it becomes a question now, not so much of whether the markets are going to crash. I think people can see how even people that aren't forecasting based on cycles are now looking at, okay, hang on a second, we've got rising rates, we've already got a stretched land market. I mean, that impacts the real estate market. As I've said continually over and over again in the interviews that I've done, land really is the base of the economy. It's the one thing that all of these events take place on that we need, that is short in accessible supply, and that the banks lend predominantly against as collateral. So once you start to see those land prices come backwards, then the base of that collateral for the bank loans is falling away. And it's likely, in these credit tightening cycles, that we're going to fall into a recession. The timing of that recession and how you time these things and how you trade them, is far harder than just saying, hey, guess what? We're the markets are about to fall. And I think that's where I've said this story before, but I remember talking about Fred Harrison and sort of arguing that he was what a fantastically successful financial forecaster he'd been, because he'd forecast all of these major mid-cycle points of the 18-year cycle and end of cycle points, sort of well before any of us were doing it, really, because he sort of came across the cycle and got the gist of it and was able to put these forecasts out there and put them out in public. And then someone commented to me, well, he should be extraordinarily rich. And it was like, it's a little bit harder than just knowing, when the markets are going to crash. I mean, it's great to have that framework, and it's certainly an advantage. But your trading course really does go into a lot of detail regarding finding turning points in the market, how you find the turning points in the market, how you were able to successfully pinpoint some of those historically. Can you talk a little bit about it? Because I know people that are watching are going to be interested in learning a bit more and perhaps even purchasing.
Well, let me first clarify one thing. We don't teach people how to. I show them the big cycles, but the course does not teach people how to time the market, because it's way too complicated. It would take me years to. I'm working with over 30 years, more than that now, of timing stuff. So I just can't teach that to the way, to the level that we use it. That's why we create the market timing report. But when you're armed with that information and you know where the cycles are, then yeah, trading is trading and investing completely different to forecasting. So the idea is you've got to be able to identify points where you can get in and manage the risk very effectively, because successful trading and investing, portfolio management, is about risk management. And you don't want to be entering, if you go into a normal casino, the odds are stacked on the side of the casino. So that's it. You're going to lose your money at some point, unless you can, outwit them. So this is what we do with our course, is that we actually think you can outwit them, because you can identify time cycles. At least we can give you those cycles. You can also see patterns, and there are structures that you can put into place with which to manage risk. So simply might be a trend line or whatever, but I mean, that's a very basic comment, really. I use far more advanced things, but there are also key price targets. So when you know where to get in, with our course, and what I have done when I have previously managed hedge funds, is this idea that this is how we manage the risk. And we never enter a trade unless we've got a minimum, it's a 3-to-1 reward risk ratio. So if we're risking 1 unit, then we're not going to risk go take that trade unless we think there's a good chance of getting 3 units back. Now, we could be wrong, and therefore we'll get stopped out or hedged in the case of larger funds and so on. So the idea is you're always going in, knowing where you're going to get out. Even if that target is reached, you can always trailer stop or whatever. And the odds are always in your favor. And it's fairly straightforward. There are some techniques. There's a technique that allows you to identify the final high price. That's exactly what happened to oil 2 weeks ago. After it, we got to the first major target, just up there over 115, $117. And that was, again, forecastable. And it's the same with these grains, etc. So we do look at these things. They are there. But trading and investing is very different. It's a fairly straightforward course. I think there's only about 5 hours of material in it, but it works time and time again. And we've got a lot of very, very success. I mean, the whole idea of this was when we created the market timing report. Well, in fact, let's even back up one step further. We created the system and we used it in-house, and we, just to pay for some of the development, we sold some signals to hedge funds who were very happy with it. And then people found out and said, how do we get hold of this? And we can't afford this and we can't afford that. And they thought, well, okay, we'll create the market timing report. So we created the market timing report, and people were using that information as part of their decision-making process. But then we also attracted people saying, well, I want to, I've been told about your report, I bought it, and I don't know how to use it. And you must have a system, whatever you do, you must have a system. You don't have to have my system, but you have to have a system. So we then created, and I said, look, this is the course, this is what I do. So I created that, and we delivered it live pre-pandemic in London over 3 days, and the promoter charged a fortune for, I think, £25,000 a head for that. And basically, we then, during the pandemic, I thought, let's put it online and at a really affordable level just to help people, and it's been there, and there are people. I'm just amazed that we get great testimonials back. The people who've been very successful. I know there's one guy who's got into 8 figures trading now, just using the simple systems. One of our friends, former dentist, he said, I only use one of the techniques, and now he said, I don't bother doing any dentistry. I still have my practices and I have associates in there working, but he just trades that and does pretty well. So it's there. But, you can show people, so you can take a horse to water, but you can't make it drink. You've still got to do the work yourself. But the idea is, with all the tools we've got, everything we got from our seasonality platform, again, if you see a seasonality setup, you've still got to use a system to harness that trade. The smart money that we talked about, the commercial money and so on, where all these things line up, then you can use the market timing report, you put them all together, and then you've got something tremendous. And that's exactly, what we've been doing. We've used our own system to be long grains from January, and also oil from January as well. So, because all these patterns were already playing out. This isn't a sudden knee-jerk reaction. And if you look at a lot of the commodities, like cotton, for example, they are, showing the first signs of turning around over multi-month and possibly multi-year moves as well. So I think there's a lot of opportunities, but it's about being patient. It's about having self-discipline, and it's about having a system.
I think there's, I know I've got a great subscriber base, because I have a lot of subscribers that will write to me bits of research and things that they've done and they found out. I know a lot of subscribers have taken advantage of some of the material that you've produced, and it's been absolutely fascinating to read some of your work, particularly how you put the cycles together. I personally think that that cycle research shouldn't be too difficult to invest based on the cycle. And the idea of really my service when I put it out was to try and make it as understandable as possible to people, so that they could read it and learn how to do it for themselves. Because to me, that's the way you change the world, and you change these destructive patterns that are happening. You teach people that, what the forecast is, and then accept that when you know that there's a forecast there, that you can do things to change and to buffer it happening. I know that with David Murray, whenever I do an interview with him, that's exactly what he talks about, which is, my motivation for doing this is to, stop the war and to, to shore up our lines of defense. When I interview Fred Harrison, it's exactly the same. He wants to change the system. It's not really designed there for people to create a fortune from. But of course, the best way to teach people to change the system is to pull them in by telling them, if you get on board of this, you can secure yourself financially and protect yourself individually. Because once they understand how to do that, then they can see the bigger picture of it.
Yeah, no, absolutely. Actually, something else I just wanted to address. You mentioned previously, just a few minutes ago, that Fred should arguably be the richest man alive and so on. But remember, people are driven by different motives, and I think it's important to understand, because you can have people that can Fred's motivation. I think Fred's a journalist by profession, from what I understand, having spoken to him. And maybe he's more interested in proliferating a message, to help people and so on. Not everybody is motivated by money. Now, in the perfect world, it's nice to have an all-round feeling of, material abundance and, connection as well. I mean, there's one of the richest people I know, doesn't want to talk to anybody, lives in a very, very big house, has a huge collection of cars and aircraft and helicopters, and is very antisocial. So, their primary motive is the acquisition of monetary wealth. That's it, uh, and the trappings off that. But that's as I did say, what happened. I do remember asking once, what happens if you can't fly, as we were talking the pandemic and so on. And he's like, well, you might as well just turn the light up. So for him, it's about material acquisition. He doesn't really want to see anybody else, and that's it. Whereas people like us, I think we like communicating with people. I learn from I learn as much every time I give something out. I get so much feedback, and I learn from that. And I'm always fine tuning things because there's always another cycle to find that fine tunes things. And I'm on that constant journey as a student. So I like to get out there and meet people, and that's why when people get in touch and they say, hey, have you seen this, or have you ever thought of that? And you think, oh, that's a good idea. And then you put two and two together and take another step forward. So people's motivation and desire isn't necessarily just about accumulating vast sums of money, although that's always a nice thing as well, right? So,
absolutely. Yeah. I mean, it was for Fred Harrison, he's an economist as well. He got an economics degree from Oxford University, but it's the underlying motivation, because I think to do what we do, which is to put out material like this, you have to have a very, very deep interest in writing and researching and wanting, like you said, to communicate that and to educate it. And the interaction I have, I mean, I know this, and I'll say this, to subscribers, I say whenever I do a live, is absolutely brilliant. I mean, I've got a fantastic subscriber base that are extremely interesting and write me extremely interesting feedback and content. So I'm very appreciative for that as well. But yeah, I mean, you're absolutely right. It is, and this was what I got because I interviewed Richard Smith, who's, I mean, you're a director for the Foundation for the Study of Cycles. It was one of the most interesting interviews that I have done, because Richard, like us, sort of sits behind a library of material, geeking out and thinking about this stuff and what drives the universe, and why can we predict these things, and why do cycles happen. And he had absolutely fascinating insights, not only on his own motivation for doing it, and I'll link to that interview in the report, but also I thought what was interesting out of that interview was he talked about quantum physics, and this idea that once you start observing the cycle, it has the potential to disappear, because when you observe something, it changes. And I know that it gets a subject. I was referencing David in these interviews, but it's a subject that I've spoken about with David before, but it's one that I've not really sort of gone into. But there has been something where I've thought, particularly writing about the 18-year cycle, which is a very easy one to forecast. The 18-year cycle gives you a tremendous amount of forecasting material, just knowing that cycle alone and understanding why that cycle happens, the economics of why it happens. It's almost like you only need to know that alone. It reminds me of when Larry Williams talked about the decade cycle and said, if you know the decade cycle, you know a heap. You can give it to your kids, and they'll make, that'll sort of shore them up for the future as well. But yeah, I mean, it's I have pondered of if so many people get to understand the cycle, does it disrupt it because they start acting differently, and therefore you prevent the cycle going into this sort of boom and bust? But I haven't been convinced of that as yet, because I've made some terrible investment decisions myself, even right in this cycle, at the peak of the cycle, where I've bought properties and all sorts of things right at the peak. So I can't say that I'm immune from, even writing about this cycle, from making being going along with my freedom of investment and wants and stuff. But yes, any final thoughts, Andrew, before we sort of wrap up?
Richard, dear friend of mine, obviously chairman of the Foundation for the Study of Cycles, CEO there. Just quick plug, if we may. There's a free webinar on the 24th, Tuesday, the 24th, on war cycles. Richard has found a load of work relating to a 17.7-year cycle from the archives. And I'm going to be joining him. I'm not sure what we're talking about yet, other than I know it's about war cycles. So that's free. And I think we'll provide you some information so people can just come along and join that. And then we are all meeting in New York at the end of May for the annual conference there. assuming, well, depending on what happens in world events. But that's key really at the moment. But final thoughts, nothing really at the moment. Just we can observe the world. We can't necessarily change it. And actually, the point that you say that, as Richard was saying in quantum physics, you can, as soon as you start observing something, it disappears or changes. That might be true. That is true. But the other side of it is that markets move in quantum leaps, based on quantum physics. And that's what, so, for those who've studied GAN and the square of 9, that's exactly what that is. That's a quantum leap calculator. The markets move in different orbits of vibration. So that's probably a whole nother topic, but that's there as well. So that's probably a bit heavy, but I guess, what would we say? Look, if we study cycles, you do probably want to prep a little bit, have a bit of food stored away and so on, and be prepared for what lies ahead. And that's it really. But, well, humanity has survived so far, and I don't see any reason why we wouldn't continue to survive, but there might be a storm or two ahead, and we're in one right now, really. So
Yes,
stay positive, really. Stay positive. That's it.
It reminds me, because I was thinking about this the other day. I'm terrible for the Instagram adverts that appear, and there's been a heap of them that have come up about, generators and things. I think, didn't you leave me a message this morning or something that you'd spent, because I bought I bought one of those solar battery things. I thought, to run they've got all these adverts that are coming out now for your wind up radios, and so that you can hear government announcements, and you can be out in the
Yeah.
wilderness but get solar power through this battery pack, so you can charge at your mobile phone. What your mobile phone is going to be connected to you, I don't know, but it's
Exactly. Yeah. Yeah.
It's funny. Yeah, I
Oh
know quite
dear.
a few people that have done it though. When you left me that message, it made me smile, because I've got a friend or two that has gone out and bought generators, and preparing themselves for the long war that is hopefully not ahead. I shouldn't be speaking those things out loud, but yeah, it's quite funny.
Yeah, and I think, on that note, the cycles do suggest we're kind of, certainly the 82 to 84 year cycle has sort of peaked, really. It's just a case of whether the bigger cycles are coming in, so there's a part of me that's optimistic that this thing might blow over relatively quickly. And then there's another part of me that thinks, oh my God, this is going to go on till the end of the decade. So don't worry about it. Be happy. Yeah, that's it. And,
Live for the moment.
life is life.
Follow Land Cycle Investor, whatever you do. I'll keep you up
That's
to
it.
date
Follow Land Cycle Investor.
with
That's
all
it.
the
Follow
best
Catherine.
forecasters. Yeah, we'll get you on,
That's
and,
it.
we will hear snippets of information. So that's the 24th of February. Was it the next storm?
Yeah, 1 p.m. Eastern time. That's American time. So I don't know what that's going to be. Actually, that's probably going to be in the middle of the night for you guys, isn't it?
Yeah, it is. The world's going to end in the middle of the night for us. Yeah, it's going while we're all asleep, it'll be okay. But the
If it does
24th
then,
is
let us know and give us the 10, 12 hour heads up then, so
yeah.
over here in England.
Yeah, I will do. I will. That'll be good. Yeah, I'll just let you know. I'll send you a WhatsApp as the world is ending. But yeah,
That's it.
24th is going to be Tuesday, but it would be probably Wednesday for us by the time all the time differences
Yeah.
play out. Yeah, and I should say that's why you were very close with your 27th of what was going to happen on the 27th, because of it was the 27th when the strike on Iran happened. It was the 28th our time, but the
28th.
27th
Yeah.
as to when
It was
everything else
still the
happened.
27th in
I
America. It was the
know.
28th. And
You
in the
still
year
got it.
ahead edition, we had,
You were still
we had
more
the,
accurate. That's right, than anyone else out there. So I have to give you full credit for that. I've learned so much from you since we've been corresponding, and absolutely love the interviews and the information that you put out. So just once again, what I'm going to do in this report that I put out, I'm going to put the links that where people, if they are interested in finding out a bit more. I should just say that the monthly report that you produce, that's really for active traders that are looking for precise turning points in the market. It takes a little bit of getting used to that report, but it's incredibly valuable because it does pick up these turns in the market. So if you have a trading plan in place already and you feel that you need that extra bit of analysis, that's really useful. You can buy it by the month as you need it. And then there's the other programs that you have, well, you've got a grain. Is it? Do you have like a grain um, special grain report that you put out, or is that kind of tied in with your?
Well, there are three grain reports: soybeans, corn, and wheat. So they're individually or as a group, depending on what people want. They're quite specialised, and we update them every month. I do a video every month updating my view on those, and so that's one product. Yeah, the reports are monthly. We do have a geopolitical commentary in that. It's not in the market timing report every month as well. It's not just the turning points, although that's the main focus of it. And then, of course, we've got the course and the smart money platform and the seasonality platform as well. So
Yes,
by the time
yes,
you put them all together, there's some very high probability setups identified.
yeah.
But you've got to do the work as well.
Yeah, I'll just say, I mean, I've done a tremendous amount of GAN courses sort of over the years, and you pay a series of thousands to go along to a weekend event. You come back with like, I'll sort of a folder full of different bits of paper and whatever else. So I actually think it's really good value what you're putting out there. I can sort of advocate that for people that it's extremely good for the information that you're giving away. It saves you thousands in going along and listening to somebody that is going to stand and drone on to you and give you bits of paper in a folder. So, okay, I will let you go. I know you have stuff to do, and yeah, we'll catch up again. We'll see how things go, and yes, we'll talk again.
Great. Thank you so much.
See you, Andrew.